Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 3rd of September, 2022, and this is the weekly technical analysis for spot gold and dollar yen for the first week of September. Let's begin with spot gold, where it did fall for the middle part of the week for 3 consecutive days to break the 21 Fib retracement level, interim support, and fell right into the next support zone, critical support zone at the 1700. It dipped below that as well, spiked through on Thursday before recovering on the Friday. And on the weekly time frame, you'll see that it did hit the weekly 200 EMA, and that's the second time it did spike through that before in July. And now it has returned to spike through that and also bounce with a lower, fairly long lower wick. So there is a possibility that just like this spike here, that it could also try to recover back up to the 1750 and the 38 Fib retracement. So let's mark that, and let's see if it's able to do that for this coming week. The Friday recovery was at the expense of the US dollar, although US dollar did pause after already climbing through. We'll see that in the DXY later on. So that was due to the non-farm payroll report, which was slightly better than expected, with slightly more jobs added, 315,000 versus 295K. But initially, let's go to the 1 hour time frame. So yes, it did push up higher before pulling back and retracing, but managed to find some support by the end of the day. So, but this critical break of support here, that's going to be an intermediate resistance now. And the next key resistance is going to be at this 1750, along with the 38 Fib retracement level. And 1750 is still going to be a strong support area. And likewise, below that, the low for the year at the 1680 area. That's okay. And let's see if there is a possible trend line that we can draw with through the higher lows. We can remove this for now. Okay. So you'll see, since this is an engulfing candle here on the Friday, we'll see there's a continuation move higher. and climbing up to attempt to recover back up to the 1750. But if it does break below the 1700 again and the trend line, then it's a retest of the year's swing low will be in play, but it needs to hold. Otherwise, it's in danger of falling down further. But there could be a consolidation period first. So possible could be a narrow consolidation, or it could attempt to climb all the way back up to 1750. So no major news this coming week except for the ISM services. And if we take a look at the weekly time frame, yes, it's we won't draw the extension yet. So we'll see if it's able to recover somewhat. But if it does break, then there's this is a major support level here. Otherwise, if this swing low gives way, then it will open up quite a wide range of support levels below that. So let's see first this coming week. And for now, we won't change this fib over yet. We could, but we'll leave it for now. So it was a retracement back into the 62 fib before a bearish continuation move, and we'll see whether this 1700 can hold. All right, and let's compare that with the US dollar index, the DXY, to see how it fared for the week. So this is the DXY, the US dollar index, and we finally see a breakout higher on Thursday, where it broke through the 109, the swing high here, previous swing high from previous month in July. So that's has been culminating or percolating for a few days with better than expected consumer confidence and also ISM manufacturing PMI surprise as well. And then it paused on the Friday with the slightly better than expected non-farm payroll with 315,000 jobs added, about 20K higher than expected. So it's in the ballpark where analysts were expecting, around the 300K mark. So that's still good news for the economy. So now this has broken through, and initially the US dollar did dip lower and managed to fight back and climb back up to close above the swing high of 109. Let's mark this as interim support. This zone here is a major support now at the 38 fib retracement from this swing high. And of course, it's going to be major support. So let's take this up for now. And the next key resistance is at the 110 round figure. The extension at 138 is still above that at 110.80. We'll see when and if it gets there. So if we started the week dipping back below the resistance after attempting to test it again for the third time, testing 109, pull back into the 21 pip retracement before finding support on that was a Tuesday, and then the pause on the Wednesday before pushing up on the Thursday with the ISM manufacturing PMIs. And this now is high since it broke up from this test here, from this high in that's in 2017, so from 5.5 years ago. Let's extend this past here. And take these out now. Okay. So there could be consolidation this coming week with no major US news. And there could be a wide range of consolidation. There's interim support as well at the 108. That's where the 21 pip retracement is, and up to this recent high. Let's mark this 108 as well. Okay. And we'll mark this as intermediate support. Okay, so there could be consolidation from the 108 right up to the 109.70 region for this coming week. It peaked at the high of 109.73. Okay, so let's move back to the other major pairs to see how the others have correlated with this US dollar index. Let's move on to the dollar yen. And finally, it has broken through the recent swing high, the year swing high, similar to the DXY, and broke through on Thursday before closing as a doji on the Friday. So but it's above the 140 level. But this doji does look slightly ominous and with a potential retracement, perhaps forming a evening doji star. So this was a critical break here, and this is now support and intermediate support. At the 129 and the swing high. Let's move this next key support from the 135. Let's move it up to the 137 and the 78 fib retracement. Okay. These here, I think let's remove this for now. Can still keep this one here at 135. Let's take a quick look on the weekly time frame. And yes, it's a very strong bullish close for the week, 3 consecutive weeks now. So let's see whether this doji is just a pause or whether it's a reversal signal. If it's a reversal, then it may be just a retracement, which could be healthy anyway. But if it's a continuation move, then it could target even higher levels. And the next area is at the 138, which is pretty high. It's already at 142 and higher. So perhaps we'll lower this fib continuation move into this swing up and a pullback into the 62 fib. And then now you'll see that the 200 fib extension has been hit, and we'll see whether that will cause the pullback lower. If this 200 fib for now, it could be preventing any further advances in the medium term, short to medium term. Okay, so let's mark this as the resistance. Okay, so do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.